Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call. It is the 18th of June. We are in a new era. Kevin Warsh took over, new sheriff's in town, and stocks did not like it. Basically, it was broadly assumed, and I'm going to put up my hand, I assumed as well, that he was going to firmly have Donald Trump's hand up the back of his shirt or wherever else you might want to imagine. But no, he came in swinging. It was pretty impressive, actually. And his press conference was a little bit shorter. He's starting a bunch of task force, which is very Donald Trump, I've got to say. But then the communications and things. But then also broadly, we had the Fed, the dot plots, basically pushing the market to pricing in a potential rate hike in the US by October. And if my experience tells me anything, all we're going to need is a couple of bad numbers and or high inflation numbers, and the market has a very bad habit of bringing that forward real fast. So as you can see, sort of Microsoft, I mean, the Mag 7 got smoked, and you've still got the chip stocks but the chip stocks, as I said yesterday, have been extraordinarily volatile at the top of the range here. They're either up or down 4 to 10%. And then, just the rest of the market broadly. I mean, we sort of had a little bit of a jump up there in some of these industrials like CAT and GE Vernova in the middle, but I'm going to say nothing really, positive about that heat map, unless you're red, green, colorblind, or you've got the Chinese version where red means up. So obviously you can see there the Dow down 1%, the S&P down 1.2, Nasdaq was down a lot more at one stage, but sort of recovered to only really be down 1% overall, and nearly 1% in the Russell. These technicals will probably start to swing back a little bit lower. We got Bank of Japan today as well, so we'll get to see whether that Nikkei gets tested after a pretty solid week. Obviously there's knock-on consequences for the commodities, which we'll get to a little bit later. Basically, this dominated the press, to be honest. There was no talk of SpaceX at all this morning on multiple news channels. Probably, because it had its first down day, albeit still up plenty. It was up 191, down 5.5%. We do now have options markets. We do now have 2 times ETF markets happening in that as well. We've got those. If you want, just go and have a look at the 5 key dates article we've got on our website on that. But look, it was all about Kevin Warsh, and no, he didn't actually. I superimposed that in, but he was very hawkish. And that was pretty much short of him actually putting a hawk on his shoulder at the press conference. He couldn't have been much more. So inflation is a choice. You bet it is. He came out swinging in terms of that. That was like basically saying that price stability for the American people is the priority, and inflation erodes the American dream. But it was pretty front foot. Forward guidance is kind of is gone now from the actual Fed and the Fed press conferences. He killed off the guidance game immediately, and it's not well suited to the current conjuncture. He's going to start some task force. One's going to handle communication, etc. But he sort of believes that it's not the Fed's job to set where the market should go. It's the Fed's job to respond to where the market is. So, which, fair call. The dot plots flipped to a hike, and March said 1 cut. Now June says 1 hike. It was unanimous, but they've all penciled in a rate rise by year end. And markets weren't really ready for that. That's what it was. That was probably what it was more so about. He didn't personally submit a dot plot, but he's only just joined. That's fair enough. And when he's sort of saying, with the fairly rough transition, with Powell still being there, etc. But look, I've got to say, 10 out of 10. He handled himself really well. He's doing the right things. He's not looking like. I mean, time will tell whether he's, but he sort of addressed that the president wants rates down, but it's just not going to happen. while things are this way, etc. So, the DOTS median realistically is, you're looking at towards 4% and above by the end of this year, and then, starting to ease potentially in 2027. I tend to think that they, that essentially these supply side inflation pressures will probably do the damage for them in terms of slowing down the economy personally. But yeah, the Fed funds futures are obviously pricing it a little bit, higher for longer as well. That's the dotted line there. And there's basically there's now no one there's only one idiot dissenter, and everyone knows who it is, who's just, who should just be booted off the Fed board. Everyone else is pretty much on the same page. And he was pretty complimentary to the general caucus. So gold, silver, copper, platinum all got smacked up. They're still up for the week. Uranium and lithium as well. But the precious metals, obviously, with rate expectations going higher, we saw like a 14 basis point shift up to the upside in the 2 years. But we actually saw bond yields drop away in the 30 years, which is which they call flattening. Essentially what that kind of means is there's more longer term confidence if and they're going to deal with inflation, and then which is going to bring down long term rates, which that might be the plan. So but it's not good for precious metals at the end of the day. So while we're still sort of bullish there, and particularly when we're about to tick over 40 trillion in debt in the US, it's fairly imminent, I believe. But yeah, I still think there'll be a time for it. But obviously, when there's yielding assets, when yields go higher, obviously the non-yielding assets like precious metals are going to be sort of hit, and they've I think they've found a little bit of a base here, and I think a lot of people have been really caught off guard because they expected gold to go up when the war was on, and now they expected gold to get hit when the war was finished, but it's become a bit more of a risk asset. So national debt in the US as we speak is 39.264 trillion. And we should be, it's going to be getting, it'll be above that 40 mark. I would say in the next month or so, I would imagine, because there's no, Trump committing $300 billion after spending $100 billion on a war, and then committing $300 billion to rebuilding the mess that he made, and causing, just general economic devastation and inflation around the world. Can't really see it turning around anytime soon. Nothing for the rest of the week, I've got to say. Calendar's pretty blank. So be interesting to see how things go over the course of the rest of the week, in terms of whether we start to slide a little bit, and what price and price and momentum does up here, because we had a really strong bounce back and at the start of the week, and then we had the buzz around SpaceX. But if sentiment starts to turn, it could be a different picture. So obviously a bit of a short one today. For those of you who watch AusBiz, I'll be on the call today with Mark Morland. We got the US stock list today, and I think we've got the likes of I think we get some Japanese stocks. We got Duolingo, Meta, AppLovin, Costco, Eli Lilly, HubSpot, Deere & Co. Pretty good list, actually, I've got to say. So tune in for that, or go to ausbiz.com.au and get the streaming version as well. And if you want as well, we've still got the on-demand mpc.co/ you can just put SAS in. You don't have to put Sascension, and get all our interactive heat maps and stuff on the software sector, etc. as well. I'll give you a tip. HubSpot doesn't rate well and will never. Or you can scan the code. But there's a couple of webinars out there. And we've got our podcast on Fridays as well, Bulls versus Bears, which is a bit of a 40 odd minute wrap up of the week in markets. A little bit more, casual and not particularly stuffy, and opinions go flying. So join myself, Kai, Jonathan, and Finn, every week for that one, and get across what's going on. Have a great day, people, and we will speak again tomorrow.